Don't we wish that we all had a crystal ball that could tell us, hey, the markets are going up or the markets are going down? And I wish I could tell you that existed. And there's a ton of market pundits out there that will tell you, hey, I called the top of this market or I called the bottom of that market. And what it really comes down to is that my job is not to predict, but to react. And to react in a way that allows me to minimize risk and maximize opportunities. And today, what I want to do is take a look at what does a scenario look like when we have no idea where the market's going and what can we do about it? So let's cover that in today's Market Brief. So there are varying degrees of market prognostication that I think are actually possible. And on the smallest of time frames, you do have the ability to identify maybe some turning points ahead of time. And that's really one of the keys to quality investing and trading decisions is finding those high probability turning points. But there's going to be times when we're at what I call inflection points in a market. And an inflection point is when we're sitting on the edge of a knife, if you will, and we can go one way or the other. And I have to have a plan for either one. And we were very, very recently in that situation in the overall broad markets. So I thought this would be a really good opportunity to explain what do we mean by that we can go either way kind of discussion. So let's go ahead and take a look at the charts and see what the charts tell us. So here is a chart of the S&P 500. Now, I took this back utilizing the on-demand feature at the Thinkorswim by Charles Schwab, and I took it back to January the 16th. And I took it back to that day because I was doing a live trading room that day. And by the way, if you're interested in learning more about our live trading rooms, go to TradersArmy.com. Use the promo code Trader60, get 60% off. But in our live trading room, we were taking a look at this, and the question arose as to where are we going next? What is the market giving us? Well, there was a bit of a conversation around the fact that we had slowing momentum. So I'm going to pull up my momentum indicator very quickly. And for my momentum indicator, I prefer just to use MACD. And very clearly, I had a situation where my momentum was waning in the markets, but I had the same highs in price. Now, that would be a divergent pattern where we see momentum going one way, price going the other. And so this also looked like it was setting up for one of the things that I learned a long time ago when I first when I first started trading is this concept of a double top, right? It looks like we could be setting up for a double top. Now, if we did get a double top, in a double top, that's a measured move. And that measured move means that if we break below this low, then we should get down to about this area here. Now, this area here is a very attractive level. If price were to get back to that level, that's a very attractive level down here because it's a prior area of resistance, an area that we would consider demand. And so in reality, a double top pullback into this level of demand is an ideal pullback for the markets overall. And that would be a decline of, from its highs, about 5%. So a 5% pullback in the market is not an extremely high pullback, but it would certainly pull us back to an area of demand and an area where we're possible to see a pretty good bounce off of that level long term. Now, that's one way to look at this and to say, okay, well, this is an opportunity to get short, but I'm not willing to get short because I'm still in what kind of a trend? I'm in a strong uptrend. And really the catalyst now becomes this swing low. And as long as price stays above this swing low, we cannot even consider that price would make it all the way down to here. So then you say, well, what do we do? Well, the next opportunity is to see that we are putting in slightly higher lows, right? We have yet to put in a lower low, and we're putting in slightly higher lows with price rising into a resistance point, and that looks to be an ascending triangle pattern. So if we have an ascending triangle pattern, then we would say if we get above these highs, then we have a potential entry for an opportunity. Now, why is that important? Because that now sets me up for 3 separate tradable opportunities. Opportunity number 1 would be the long above the breakout point at 48.02. Opportunity number 2 would be to take a short down to this region as a small, shorter term trade and then look for a rally back up. And opportunity number 3 would be simply to wait to buy stocks that get beat up when the market hits this area of demand. And so we need to have contingency plans in place for all 3. So on that very day, one of the things that we looked at that day in class was a stock that, like Marriott, right? Marriott was a stock that had another area of demand that we had bounced off of a high and is at an all-time high. And I once had a mentor tell me, he said, don't ever buy the all-time high. You want to wait for a pullback to buy what's called low on the supply and demand curve. And I got to tell you, I missed so many good trades by waiting for pullbacks. Waiting for pullbacks is one of the most expensive things you can do if you understand how to trade breakouts in a proper fashion. And a stock like Marriott on the 16th was giving you that kind of a picture. In a similar light, we had a stock like Visa, which was also giving us that kind of a picture. A stock like Hilton, which was also giving us that kind of a picture. So all of them giving us that picture on that day to take advantage of. If we rally up, then we're going to look for a trade in that sort of an ilk. Conversely, a stock like Apple had been pulled back. It was a nice little pullback, underperforming the market in general. And if the market were to pull back and Apple at the same time were to be in this region somewhere down here, then it would be a good buying opportunity for Apple, right? And so now it really comes down to identifying what are going to be some of the catalysts that are going to cause that price movement. Now, fast forward in time to where we are today. And I'm recording this on the 22nd. I'm recording this on the evening of the 22nd at about 8 o'clock at night Central. And so the market has closed for the day after Monday. And lo and behold, we did get that rally up that we had spoken of. Now, do I know for sure that it's going to continue? I do not, right? And stocks that we talked about like Marriott and stocks like Hilton and stocks like Visa have continued to rally up from that area where the market gave us a pretty good entry possibility. Stocks like Apple certainly didn't make it to those demand areas because it went as the market went as well. So what's the moral of the story? What am I getting to? What's the point? The point is that predicting the market is challenging. Where are we going to go? I don't know. But my trend right now is telling me to be a buyer. And when my trend is telling me to be a buyer, I'm looking for buying opportunities in a strong up market. Fundamentally, I want to find stocks that are going to be following market movement and looking for ones that are going to provide me with higher relative strength in the market in general when I'm looking to be a bullish investor. So hopefully this makes sense to you. If you have any questions, send us an email, support@tradersarmy.com. Until next time, everybody, I will talk to you soon. See ya.